Good afternoon and welcome to the look ahead for tomorrow, Friday, the 24th of January, with me, Fiona Cincotta, Senior Market Analyst at City Index. So looking ahead, we'll have the Japanese Bank of Japan rate decision overnight. Tomorrow in the European session, there's the European PMIs as well as the UK PMI data. In the US session, we have US PMIs as well as existing home sales. Earnings season as well continues. In the US, we have American Express and VZ. So that's what we're going to be focusing on. So let's just start with the Bank of Japan interest rate decision. The Bank of Japan is widely expected to increase interest rates by 25 basis points. That's around 96% priced in at the moment. That will take the interest rate there to from 0.25% to 0.5%. Now, there's been sort of signals from policymakers at the Bank of Japan who have suggested that they want to see wages increasing or wages rising on a persistent basis in order to feel comfortable that inflation will remain above target and to raise interest rates. Now, we have heard comments that they do consider that wage growth is persistent. So inflation data is also due tomorrow. Core inflation, that comes out just before the Bank of Japan interest rate decision and is likely to be overshadowed by the rate decision. But we're expecting the core inflation to rise to 3% year on year, so above that 2% target. Now, here we're just looking at USD Bank of Japan. Obviously, just worth mentioning as well that I think, any comments, as we know, from Trump will also have the potential to move the market. Trump is speaking at the point, or just started speaking in Davos at the World Economic Forum in Davos as I'm recording this. So exactly, I mean, we've had some comments on oil. We'll come to those later. But again, the market's going to be watching for any further policy indications from Trump, which would have the potential to move the markets and particularly move the US dollar. Now, this is the US dollar Japanese yen. As you can see, we're just seeing its sort of slight consolidation around this level here. This is around the 156 level. So we did have this rally up as the yen weakened up to that 158.80 was the sort of 6-month high that we saw there. Since then, we've seen this ease down to the 156 level, just finding support there on the 50 SMA. Now, if we do hear dovish, so if we're expecting that rate cut from the Bank of Japan. But if we do hear a slightly dovish tone for them because of caution regarding what might be expected from Trump as far as trade tariffs are concerned, and what the impact that could have on global growth, that could turn the Bank of Japan a little bit cautious, and we may hear a slightly more dovish stance from them, in which case we could see a weaker Japanese yen. In that case, we'd be looking for, and obviously if we see sort of more comments from Trump, anything regarding trade tariffs, even this uncertainty, the fact of silence regarding it is also sort of just feeding a little bit into that uncertainty, I think, which is helping the sort of moods there a little bit cautious. But as we're looking at this at the moment, we are still seeing a slightly weaker dollar. If we do get sort of comments from Trump that are slightly less aggressive as far as trade is concerned, then that could also help pull the US dollar lower. So if we do get the dovish sounding Bank of Japan, then just watch out for a move towards that 158.80 and above there 160 comes into focus, especially if we're sort of hearing anything about trade tariffs as well, which could drive US inflation concerns. On the downside, the 50 SMA at 154.80, that's going to be a level to watch on the downside. It's just below the 155 round number, and it's just been what's holding and supporting the pair just recently. If we're going to break through there, then I'd be watching out for this level here, the 61.80% fib level at around the 153.40 level, and that's just ahead of the 200 SMI. We've also got, as I mentioned, the US PMI data. US PMI data, we are expecting the US PMIs to show that the US economy is still in pretty good shape. We're seeing the service sector remain in expansion territory up around the 56 level, manufacturing as well, and the composite should show growth. So, I mean, unless there's a sharp weakening there, then that will just support the view that the US economy continues to perform well. So let's just take a look. We've also got, as I mentioned, just bear with me, where um, the Euro PMIs. So we'll just take a look at what's happening Euro US dollar as we go into those PMIs. PMIs are expected to show that the economy is continuing to struggle in the Eurozone. The services PMI is expected to remain unchanged at 51.6, not so bad, but manufacturing is expected to stay very weak at the 45.3 level, just up very slightly from 45.1, but still well within the contraction territory. And composite PMI is expected to remain in contraction as well, below that 50 at 49.7 versus 49.6. So here, what we're just looking at here is the US dollar. And I guess if we do see some weak data, I think that's going to cause some concerns. Obviously, this is the rally that, or the pickup from that low that we've seen on the back of, the fact that Europe hasn't been hit hard with trade tariffs yet. That's sort of staged a little bit of a recovery in the euro, and obviously we had that weakness in the US dollar as well, as some of those aggressive trade tariffs were sort of unpriced. And so, but I think in order to see an extension of that recovery, we do have the ECB interest rate decision next week as well, but we're going to need some signs of some stronger data from the Eurozone region. Buyers are going to be looking for a rise above 104.50 to create a higher high. We're just seeing it's trying to move above that falling trend line, trying to break above the 50 SMA. So it's a pretty key area that we're trying to break above. But if we get weak data combined with expectations of ECB rate cuts, I think the weak data could add to expectations of further rate cuts from the ECB, which is going to put some downward pressure on the euro, unless obviously we see any big moves in the US dollar. Next level on the downside will be 103.35. That's that low that we saw back in November. And that's to watch on the downside. And then below that, we've got that sort of that 101.77 2025 low. The other thing that we were watching, I said that we've got the UK PMI data as well. So let's just have a look at what's going on with FTSE, because this is really quite interesting. UK data is expected to show that services PMI is expected to remain in expansion at 50.6 versus 51. Manufacturing in contraction at 47.1 versus 47, and the composite at 50. So we're just at that stage where actually, could this just be heading into a little bit of a contraction? Will we see, if we get weaker than expected data, that is going to show a contraction on the PMI side. Now, that could mean that we see the pound, which, we know the pound sort of has been struggling. Let's just quickly pull that up. The pound's been struggling around that 123 level. It's just over 123. It's struggling around that 123.50. We get weak data, I think that could come back down into that below that 123 level. But what this means is weak pound that we've seen has been beneficial for rate cut expectations, which has helped lift the FTSE to record highs. And that's where we're still sort of settling around at the moment, is around this record high. We had this sharp breakout here above the 200 SMA, and we'd just be having a look for a rise up towards the 86 level, potentially, if we do have some weak data there. As far as levels on the downside to watch, this is the level, that's the previous all-time high of 84.80. That was the high that we saw back in May last year. The other final one, as we see, earnings season continues to roll in. We've got figures coming in. This is the NASDAQ, but the NASDAQ obviously had that news about Trump investing 500 billion into AI investments in the US, which helped boost AI stocks. There hasn't really been any follow-through rally from that yesterday, but it did help the price just get over that level there of the 21 sort of 500, 21,600 level that it had been sort of struggling around. So we've seen this break above this falling trend line here that's dating back to December. That's actually a falling wedge. We've broken out of that. Next level on the upside is going to be 22,100, which is what the bulls will be watching for. On the downside, you got that 21,600, 500 resistance on the downside. Just finally, wanted to bring your attention to oil, which is going to be falling after we had comments from Trump. It's down over 1% now after the comments from Trump at Davos. That has come in that he wants Saudi Arabia to lower oil prices as a way in order to end the Russian-Ukraine war. So we've got oil. We know that Trump has already sort of made plans against oil by so to increase oil supply, by increased drilling in the US. Um, this is all sort of part of his plans to help lower costs for Americans and to get oil prices and petrol prices at the pump lower. So oil is actually now falling below that 200 SMA. It's coming below the 75 support. Just going to be watching out now for that 72.50, 71.50 resistance or support, sorry, that's going to come into focus now, which is also levels that have been very much in focus across the past 6 months. That's what I'm going to be watching. So I hope that you've enjoyed this session, and if there are any questions, then please do reach out. Otherwise, I look forward to seeing you again tomorrow.